Hey everyone, welcome back to Corporate Decoder. Today, T. Rowe Price International Funds Incorporated just released its semi-annual shareholder report for April 2026, and I am seeing some interesting moves in their emerging markets fund. Quick note, this is not financial advice, just my take on public filings for educational purposes. The fund is showing strong growth, but also some significant shifts in its asset allocation and investor classes. This report covers the Emerging Markets Discovery Stock Fund from November 2025 to April 2026. T. Rowe Price is definitely a major player in asset management, and this fund aims for long-term growth by investing in emerging markets. These are countries that are still developing their economies, think places like China, India, Brazil, and many others. Investing in these markets can offer higher growth potential, but also comes with more risk compared to developed economies. First off, let's look at the big picture. The fund's total net assets stand at a massive $6,130,839,000. That is over $6 billion. This shows the fund is quite popular and has a lot of money being managed. It is important to note that this figure is the same across all four share classes we'll look at: investor class, advisor class, I class, and Z class. This implies that while the total amount in the fund is immense, the assets might be distributed differently across these classes. Now, what is this money actually invested in? The sector allocation gives us a good snapshot. Information technology is the biggest slice at 29.2%. This means the fund is heavily focused on tech companies in emerging markets. Following that, financials make up 22.5%. This includes banks and other financial service providers. Consumer discretionary is at 10.8%, suggesting a bet on consumer spending growth. Materials and industrials and business services are also significant at 9.9% and 9.0% respectively. Energy, communication services, real estate, and healthcare make up smaller portions of the portfolio. Let's dive into the actual companies where the fund is putting its money. The top holdings are quite telling. Taiwan Semiconductor Manufacturing leads the pack at 8.4%. This is a huge player in the semiconductor world. Samsung Electronics follows closely at 8.1%. Another tech giant, SK Hynix. Another South Korean semiconductor company is third at 4.9%. MediaTek, also in semiconductors, is at 3.2%. So just looking at the top four, we see a very strong emphasis on the semiconductor industry. This is a key insight. The fund is really betting on the growth of chip manufacturing and related technologies within emerging markets. Then we see Alibaba Group holding at 2.5%, ICC Bank and Ace Technology holding both at 2.1%, and Saudi National Bank, Reliance Industries, and China Construction Bank all around the 2% mark. This mix shows a diversified approach, but the tech concentration at the very top is undeniable. Another important metric for any fund is its portfolio turnover rate, which is 25.1% here. This means that over the reporting period, about a quarter of the fund's holdings were bought and sold. A turnover rate in this range generally suggests a moderately active management style, not overly aggressive but not passive either. It means the fund managers are actively making decisions and adjusting the portfolio's holdings. Moving on to some more detailed financial statistics, the portfolio turnover rate at 25.1% is consistent across all share classes, which is good to see as it suggests similar investment strategies are being applied across the board. The number of portfolio holdings is 70. This means the fund is investing in a diversified basket of 70 different companies. This number is also consistent across all classes. Now, let's talk about costs because that directly impacts your returns. The report breaks down costs for a hypothetical $10,000 investment over the last 6 months. For the investor class, the cost was $61, which is 1.13% of the investment. For the advisor class, it was $84 or 1.55%. This class seems to have higher costs associated with it, likely due to distribution and servicing fees, which is typical for advisor sold shares. The I class had costs of $53 or 0.98%. This class generally has lower costs for larger investments. And then there is the Z class. For this class, the cost was 0 or 0.00%. This is because the Z class shares are primarily for institutional investors and are often used within other T. Rowe Price funds, so they don't carry the same day-to-day operating expenses for the end investor. This can be a significant advantage for those eligible to invest in it. Let's look at the net asset value per S-share for each class over different periods. This tells us how the fund's value has changed. For the investor class, the net asset value at the end of the period was $20.83. This is up from $18.51 in October 2025. That is a nice increase. The total return for this period was 17.76%. The advisor class ended at $20.53, also up from $18.23 in October 2025. Their total return was 17.49%. As expected, the advisor class total return is slightly lower due to its higher expense ratio. The I class shares ended at $20.65, up from $18.37. Their total return was a strong 17.82%. Outperforming the other retail classes slightly due to its lower expense ratio on average, and the Z class shares closed at $20.88, up from $18.63. Their total return was 18.42%, the highest of the lot, which we'd expect given their virtually non-existent expense ratio. Diving deeper into the actual investments, this section details the fund's holdings by country and by asset type. China is the largest country allocation at 20.3%, followed by Taiwan at 16.4% and South Korea at 15.8%. These three countries alone represent over half of the fund's portfolio. This clearly shows the fund's strategy is heavily concentrated in East Asian emerging markets, particularly those with strong technology sectors. Within China, common stocks make up 15.5% of net assets. Companies like Alibaba, China Construction Bank, and NetEase are listed. Taiwan's portfolio is dominated by common stocks at 16.4%, with Taiwan Semiconductor Manufacturing being the largest single holding in the entire fund. South Korea's portfolio is also entirely in common stocks at 15.8%, with Samsung Electronics and SK Hynix being the major holdings. Looking at the statement of assets and liabilities, the total assets are $6,222,153,000, and total liabilities are $91,314,000. This leaves net assets at $6,130,839,000, which matches the figure we saw earlier for total net assets. The fund also holds foreign currency, with a value of $19,967,000. This indicates the fund actively manages currency exposure, which is crucial when investing internationally. It is also interesting to see that the fund has an obligation to return securities lending collateral of $39,945,000. This means the fund participates in securities lending, where it lends out its securities to earn extra income, and it holds collateral against those loans. The statement of operations shows how the fund made and spent money over the 6 months. Total income was $62,127,000. This primarily comes from dividends from its investments. Total expenses were $4,514,000. This includes investment management fees, shareholder servicing costs, and other administrative expenses. Net investment income came in at $57,613,000. The real story here, however, is in the realized and unrealized gains. The fund reported a net realized gain of $543,530,000 from selling securities, and the change in net unrealized gain was a massive $352,081,000, meaning the value of its existing holdings increased significantly. This resulted in a total increase in net assets from operations of $953,224,000 for the period. This is a very strong performance driven by both profitable sales and appreciation of existing holdings. The statement of changes in net assets provides a year-over-year comparison. For the 6 months ending the 30th of April 2026, the fund saw an increase in net assets of $473,582,000. This is a solid gain, building upon the previous year's increase of $1,141,975,000. The fund also saw significant activity in capital share transactions. Millions of shares were sold across the investor, advisor, and I classes, while the Z class saw a net redemption of shares, likely reflecting its use as an underlying fund. Now, something really important for understanding how the fund is run. The board of directors reviewed and approved the continuation of the investment management agreement and sub-advisory agreement. This is a standard annual process, but it is where the board assesses if the fund manager T. Rowe Price Associates is doing a good job and if the fees are reasonable. They looked at the nature and quality of services provided, which include managing the fund's investments, compliance, and administrative tasks. They also reviewed investment performance compared to benchmarks and peer groups. The board concluded that the services provided were adequate and that the performance was satisfactory enough to continue the agreements. They also looked at the costs and profits for T. Rowe Price, concluding that the profits were reasonable. This part of the report is crucial as it shows that the oversight bodies are actively monitoring the fund's management. On taxation, the fund generally doesn't need to set aside money for federal income taxes because it plans to distribute all its taxable income and gains to shareholders. This is typical for a regulated investment company aiming to avoid corporate level taxes. Interestingly, as of the 31st of October, 2025. The fund had $614,047,000 in available capital loss carryforwards. These can be used to offset future capital gains, which is a valuable tax shield. The report also details related party transactions, which means dealing with affiliated companies. T. Rowe Price Associates manages the fund, and they use fees based on a group rate and an individual fund rate. The report here mentions expense limitations for different share classes. For example, the investor class has an expense limitation of 1.13%. Advisor class at 1.55% and I class at 0.05%. The Z class has a 0.00% expense limitation because its costs are covered elsewhere. This shows a tiered approach to fees where investors with larger investments or those using specific classes pay less. The report also indicates that T. Rowe Price itself holds a significant number of shares in the I class, about 4% of its net assets. This shows some alignment of interest between the manager and the investors. Finally, a note on how assets are valued. The fund's financial instruments are valued at fair value using a hierarchy that categorizes inputs. Most of the fund's value, about $5.2 billion, falls into level 2 of this hierarchy, meaning it is based on observable market data. This suggests a good degree of transparency in how the fund's assets are valued. So overall, the Emerging Markets Discovery Stock Fund from T. Rowe Price is performing well, with strong gains driven by technology and financial sector investments in key Asian emerging markets. The fund is well managed with significant oversight from its board, and the fee structure varies across its share classes, offering options for different investor types. The high concentration in tech, particularly semiconductors, is a clear strategy to monitor, as it presents both significant growth potential and a concentrated risk. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.